Good morning, good afternoon, good evening, folks. Michael Zuber, one rinse at a time. It is Thursday afternoon, and we all have the treat of the three amigos. Do me a favor, if you're watching this video, subscribe to my channel, subscribe to Lumberjack Landlord and Dion Talk. We are here for you, so take a minute to give us some love. How you doing, Mr. Matt, the Lumberjack?
I'm doing awesome. Ready for this segment, which I know will be illuminating.
There you go. And Dion, how are you?
Howdy, doing great. Ready for round two.
Awesome. So what I want to do here, guys, is I want to officially declare the bull market dead in the stock market. This is important because there's been a lot of people who have made a lot of money because they got lucky and the bull's dead. And a lot of them don't know it yet. And a lot of them are still executing what they were doing 30 days ago. And if they continue to do that, they will suffer what I suffered 21 years ago when I lost 80% of my capital. I was in a bull market. I rode that bull for all it was worth. It turned into a bear market. I did not recognize, didn't understand, thought I had figured it out, and the bear market ate me alive. It is now happening. More importantly, I believe we are about to see a bear market like 1974 and 75. And why is that important? That is important because it was a bear market that was like a death by 1,000 cuts. It was slow and painful over a 24-month period. And I don't think people are ready for it. I still see YouTube's channel talking about, oh, here's the dip, buy the dip, da, 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 da. Folks, if I'm right and we are in the 73, 74 bear market, it's a 45% drop from peak to bottom. We're down 15% in the S&P. Yeah, we're not even close. And there's a lot of similarities between 73 and 74 now. But so I thought I would come to you guys first. Dion, what do you think? The bull is dead. It's a bear market. Time to deal with it.
Well, one of the things I like about our content is we try to break it down to its core principles for the newer investor. To get to four, get on the property ladder. So we explain things, I think, in the simplest terms. This is how a mortgage works. This is how good debt compares to bad debt. And so for somebody who invests in real estate who has never really cared about bull or bear markets, the closest analogy that I've heard when I was just starting out that actually helped me understand what people mean when they say that is a bull market is like a big Taurus just full of muscles walking upstairs. Takes its time to get to that second floor. So you got an 8-year rise in a bull market. A bear market is when that bear is upstairs, sees the bull and jumps out the window. That drop is much faster. You said it's like death by 1,000 cuts, but it was a 24-month period. That's still just 2 years.
Yeah.
For things to drop, it happens rockets and feathers. Things, they take a long time to go up, but they can come down really quick. So bear market goes up slow, bear market comes down quick. So if you're a new investor, that's what we're talking about when we try to make that analogy of we're exiting a bull market, because since 2011, it started going up in 2011. Since 2013, everybody's been saying crash is coming, correction's coming, don't buy now, wait for the dip, wait for the whatever, the weird thing that was never going to happen yet. Prices have continued to go up. So that's real estate. The stock market and crypto, where we see a over 50% drop in Bitcoin in 1 week. This is bloodbath bear market. I'm still waiting for the stock market to be impacted to such a level that it then somehow impacts demand in rentals. I think initially, as people pull their money out of the stock market, trying to avoid the crash that they're seeing, they're going to have capital they want to redeploy. So in the short term, we're going to see more demand. The fear of interest rates going up is also contributing to that. So the next 2 months, I think a lot of demand is going to happen. Once the stock market gets down so far that the people aren't pulling money out to deploy, I think at some point that's going to make less demand for rentals. But that's me, the uneducated guess.
No, I like that. And Matt, what do you think?
I just need there to be a bear market in Lamborghinis. The rest of it I don't really care about.
So you and I specifically have recycled cash, which means we've gone back to assets and taken cash out on purpose. We were paying 0% interest on the equity. We are now paying, call it 4% on the debt.
Mhm.
We built dry powder on purpose because we expect some assets, maybe toys,
Yep.
to become cheaper when
Oh, yeah.
idiots who overpaid have to liquidate. So
Yep.
this is what happens in a bear market. This is,
Yeah.
yeah,
I mean, I think, so to that point, that's exactly right. I'm not walking into a Lamborghini dealership and saying that one.
no,
I am literally waiting for the three guys to come running out of the bank with their hair on fire and them going, I gotta sell everything to cover my margin. I gotta sell it. As luck would have it, I have some available capital.
yeah,
Come on over.
yeah. I
And
can write
that's-
a X check. Would that help?
Exactly. Yeah. And so that's what's I mean, that's been, that's always been, the Warren Buffett strategy. Like, everybody's running out of the building. I'm walking in. I'm walking in,
Right.
and I'm just taking my time. And if I see that it's a death trap, I stop walking.
Right.
But I think the key for people is, I think that, I mean, honestly, oh, thank God. I can literally just sit there and every once in a while, I just have a little giggle when I'm watching CNBC in the morning.
Yeah.
I'm just like, oh. And I call my broker and I go, did my house go down 35% today? Just real quick. Did it? Oh,
Yeah.
okay. Thank you. And then I look at my bank stub and I'm like, okay, good news is my rent didn't go down 35% either. Listen, I'm not reveling in people losing money in the stock market by any stretch, but it is the nature of the beast.
Yeah.
Win by the sword, die by the sword. And that is a very sharp sword up and down both ways. And I think the thing that, to something that Dion's going to talk about later, I think that you've got to be very, very careful with the inside game.
Mhm.
And there just isn't that level of it in real estate. There just isn't. So be smart, have capital reserves. Maybe you're going to have a higher vacancy rate. Definitely your bills are going up. All of those things are likely going to happen in the next 12 to 24 months.
Yeah.
But if you've done the business right, you're largely going to be unscathed.
Yeah. I guess there's a couple of things that I see going on right now. And it's again, having experienced, I have empathy for it.
Yeah.
You have just come out of a 2-year run where you could be stupid. You could apply max leverage to companies that didn't make money and you made $1 million.
Right.
The bull market is dead. To Dion's analogy, the elevator is about to kick in and it is going to hurt. Some stocks are down 50% already and people are still talking about the dip. Folks, the .com crash era, if you're young enough where your only search engine is Google, you don't remember Ask Jeeves, Excite, Yahoo, for heaven's sakes. There and the list, Netscape, the list goes on and on and on and on. There were dozens of Netscape browsers or search engines at one time. All of them raised billions of dollars. One. Yes, you can talk about Amazon going from nothing to a gazillion. I checked one time and there were 387 companies that went public the same month as Amazon. And I think only 3 of them are still around. Some of them got acquired and all of that,
Sure.
but only 3 of them are still around. You guys don't know. I mean, you have had it so good for so long, you are now warped. Now what I want to do is just show you the 1973-74 recession and why it was so painful. Because I want this to wake people up. So let me just share it. And again, I give this darn spreadsheet away in the free course. So hopefully you guys can see this now.
Mm-hmm.
So the 73-74 recession actually is this column because my data is from January 1st. So the S&P 500 went down 18, almost 19, and 24%. So that's a collective 43.3%. It went down in 23 months. Interest rates are up here. They only went up 1%. That's what actually people are calling for this year. Home appreciation, look at that. Home appreciation, even though the S&P went down, we still had rising home prices. And that is because wage growth. It's about wages, right? And oh, by the way, look at CPI, or AKA inflation. So we have high inflation like we haven't had before. If we do have a bear market, it could be 2 years in the making. Real estate doesn't have to go down, but it can. We have to watch wages. Wages are the big thing. So any questions on this? I know you guys have seen this dozens of times. No?
Dion?
No, I'm glad you did the work to put that together, because I look at that spreadsheet often.
Yeah, it's one of the things that I talk about with people often, which is there isn't this vending machine approach to real estate. Put dollar in, get Coke out. Put dollar in, get Coke out. Put dollar in, get Coke out. And it certainly isn't that fast. Put dollar in, push button, get Coke out. That's not how this works.
No.
I said, if you want to get into real estate, long-term investing, buy, hold real estate, and even eventually someday burrs and flips and all that other good stuff. You are needing the discipline and the patience of a farmer. It's what it is. And the more seed you sow, which is your time, the more seed you sow, which is your time, the better harvest you're going to get when it comes time to reap a harvest.
Yeah.
But it is much more a farmer analogy than it is a vending machine analogy or stocks or any of that other stuff. And again, there are no quants trying to fight against me buying property.
Yeah, exactly.
And I will take that every day of the week.
Yeah, no algorithms just beating you up for an eighth of a point or whatever.
Well, there was a couple algorithms and I kicked their ass.
Yeah, Zillow and Redfin.
Yeah, I won.
Or whatever the other one was.
Yeah, I fire saled 0 properties to Wall Street this year.
There you go. There you go. Well, folks,
So-
again, we're in a go ahead, Dion.
Sorry, the thing to consider, if, not everybody who watches our channels only invests in real estate. There's some
No.
people who have money in stocks too.
Mhm.
And when we hear things about crash, correction, bloodbath, things that are going on right now, this is not the time to sell. This is not the time to pull your money out. The studies that have been done show the most successful stock portfolios belonged to people who had died because they didn't touch them.
They didn't
The
sell.
second most effective stock portfolios were retirement accounts that people forgot they had. And then the third, I think, was a cat that walked around and hit numbers and they went for those. But that's the reality is the stock portfolios that don't get touched because the person was dead performed the best. So right now, this year, people are thinking, I have $20 million in stock. I'm going to sell it all. Whatever loss they just realized wouldn't happen in 5 or 10 or 15. And that person doesn't need that money for 10 or 15 years. So there are other people out there that might not have 20 million, but unless you need the money today, no touchy.
Yeah. What I would tell investors to do today, because I was that guy 20 years ago, not with the, he has several more zeros, but he is on tilt. He is freaking all over the place lately. I know what that feels like. He needs to take a break. He needs to put the computer away for a while and just decompress, because he is trying to fight his old habits that worked in a new environment. And he is guessing at this point, and you should never guess with money, in my opinion.
The reason he will likely get crushed largely is because he believes that he's smarter than the market.
He does every day. He thinks he's smarter than everybody.
He believes that he's just figured it out. Kevin, I get he's smart. He's a wicked smart guy. Definitely super smart. And the market is going to spank him because that's what markets do.
Yeah. But again, he's making $1 million a month, so he can lose 200 grand. It's okay.
Well, that's the whole thing, right? Is if you're making, I think he'll make 20 million this year from
YouTube and courses.
20 million in courses and YouTube, 20 million. So you can cure a lot of stupid with 20 million.
Yeah. He can write off your tax. He could probably write his stock losses off his marketing.
Probably. But the problem is there's people watching him trying to play that game.
Oh, that's
no. Go and try and dunk from the free throw line. Let me know how it goes.
Or maybe
it's my
kind of copy him. He's going to make 20 million in a year.
Mm-hmm.
He put 20 million at risk. If you make 60,000 a year, don't put more than 60,000 at risk.
Mm-hmm. I was going to say, I thought you were going to say, don't put more than 20 million at risk if you make 60,000 a year.
Yeah, it's the last thing I will say on this is you have to know who you are. If you're an investor, if you're a trader, or you're a speculator, all three of them are awesome.
Mm-hmm.
Don't confuse them.
Right.
Just this morning, he says, I'm an investor. He's looking at freaking candles every 4 minutes. At best, he's a trader. And then he's talking about, I think, I hope, I think, I did, the speculator. And if you are calling yourself an investor, but acting like a speculator, you're done. The game's over. You've lost. The market's going to eat you alive.
Mhm.
Yeah, be careful. All right, guys. Dion, how can people find you?
Right here on YouTube, Dion Talk Financial Freedom. Live streams are Tuesdays, start at 4 p.m. Last until the questions stop coming in.
It's amazing. And Matt?
Same. Mr. and Mrs. Lumberjack tonight, 8 p.m. Eastern time on Lumberjack Landlord on YouTube, and Sunday, 11:30 a.m. Eastern time after daily financial news on One Rental at a Time every weekend.
It's awesome. Thanks, guys.